How are we all? Just waiting for everyone to hop online. Hey everybody. Now we're live on Insta and on Facebook. So yeah, thanks a lot for tuning in this week, everyone. And got some interesting topics to chat to you about. So it appears that everyone's loving these Tuesday night chats, and I've got to make sure that I'm here for everyone to share what's happening in the news and the media, dissect all the information that's out there and bring it all to you in a simple sort of way. So yeah, get straight into it. Hey everyone. Hey Michelle. I got to give you a buzz shortly. Hopefully everything's all good. Hey everybody. Nick, Sophia, Prashant, Layla, and everyone on Instagram. So yeah, tonight I want to talk about finance, what's happening out there. It's, you guys asked me lots of questions. I'm going to ask you guys some questions this evening based on a Facebook and Instagram poll that we did yesterday. Interesting to hear people's thoughts and questions and create a bit of a conversation around something. So I'm going to get straight into the news, maybe spend 15 minutes or so looking at what's happening out there in financial markets, give you my thoughts, my feedback and whatnot on that, and then get straight into it. So basically, as we get offline every sort of Tuesday night, there's always some sort of weird news that comes out very quickly. So the other week, we noticed that they're going to, as soon as we got off Facebook Live, Instagram Live, they came out and said $270 billion worth of more stimulus, right? Which got us up to about $750 billion worth of stimulus packages since March this year. Last week when we got offline, APRA, our favourite communist outlet, there's lots of commie outlets that we all got to love. Anything with a .gov.au, it sort of falls under that category. No offence to anyone that works in government, by the way. This APRA update is an update to loans subject to payment deferral. So the Australian Prudential Regulation Authority, APRA, today announced an extension of its temporary capital treatment for banks with loan repayment deferrals, as well as temporary adjusting the capital treatment on loans where terms are modified or renegotiated, i.e. restructured loans. These loans are now called restructured loans. Did you put your mortgages on hold for the last 6 months? A lot of people did. A lot of people didn't look to see what the ramifications of that would be. There is no right or wrong, right? If you're trying to get a mortgage now and you're trying to pull out equity from your property and you put it on hold, you won't be getting a refinance anytime soon. You've got to wait 6 months. Looking at what the adjustment of this is going to be, on the 23rd of March 2020, APRA announced that the banks that offered borrowers impacted by that C word with the numbers that I can't say, scamdemic, an option to defer repayments for a period of up to 6 months need not treat the repayment deferral period as a period of arrears for capital adequacy and regulatory reporting purposes. APRA will write to all authorised deposit taking institutions. They are ADIs, is a code name. So basically the big four banks. Anyone that not a lender like a second or a third tier lender, your big four banks. They're going to write to all the Australian deposit taking institutions this week, advising that the regulatory approach will be extended to cover a maximum period of 10 months from the start of repayment deferral or until the 31st of March 2021. Whichever comes first. So, in short, everyone's sitting here going, great, this is awesome time, don't have to pay my mortgages. A lot of people are sitting here saying, shit, what happens at September when this ends? Everyone's going to go bankrupt and it's going to be awesome. Property markets are going to let the market crash and all this. Right? Don't be fooled, guys and girls, everyone. They're not going to let this thing implode, right? I wish the property market, more so than probably anyone here, would implode. I would love to see house prices fall in half. I'd love to see these things happen. They're just kicking the can down the road. So now your mortgages are going to be on hold until middle of next year almost, right? And 12 months almost, right? March to March. Who would have thought? 12 months holiday. Banks are now changing other things out there. We'll get onto that shortly with my next sort of notes. But very interesting that they have now extended this for a longer period. The longer period, going until next year, March 2021. Don't have to worry about paying your mortgages, everyone. Who would have thought? I would have. It's interesting because I don't believe they can roll this back. The only way they can roll this back is if they go into negative interest rate territory. So if we go to negative interest rates, it will become possible to allow you to pay your mortgage again because you wouldn't be paying the mortgage anyway. So we're at a point where the property market, the financial market, everything is being kept alive on life support. Last week, people found it was funny when I put the heart rate monitor in our 30-day interbank cash rate futures, and it looks like a flat line, like a heart rate monitor. But I've got some new ones to share with you, just to re-solidify to everybody that we were completely and utterly fucked in September 2019. So now that we've covered on that, so home loan deferrals, everyone is thinking, better hold on. September's going to be the big time, folks. September, everyone's going to go bankrupt. Everyone's going to default on their mortgages. No, they won't allow it. Yep, and that's where we are. There's some better. It gets better than that. As I said, I believe that the road moving forward is that they will kick the can down the road until we get into negative interest rate territory. A lot of people are saying that we're going for a V-shaped recovery, which everyone thinks, it's fallen off, it's come back up, it's perfect, right? The only V-shape pattern we're going to get is when V stands for Venezuela. As I said last week, still got my trusty shitty notes here from Budapest back in 1946 when the Pengo got eradicated via hyperinflation. The only V-shaped recovery we're going to have, folks, is Venezuela, right? Picture that, picture what's happening shortly. Question here, there's an article that came out from The Guardian. Your privacy. I've got to be okay with that because no one has any privacy anymore, but that's a separate topic for today. It goes on to read, article from The Guardian, and this was put out by a lot of communist news networks. New home loan finance plunges in the biggest monthly drop in Australian history. Should we be concerned about that? ABS data backs up reports from building sector that the construction pipeline is drying up as the industry is headed for a cliff. The Morrison government will be under new pressure to bulk up its measures to stimulate the housing sector after new loans for housing finance experienced the biggest monthly fall in the history of Australian Bureau of Statistics housing data. The new statistics back up an anecdotal reports by those involved in the early part of the building process, such as architects, engineers. Construction pipelines drying up. The construction industry has so far weathered that word that we shall not say, slow down better than most. With building sites continue to operate, but with the sector accounting for nearly 10% of jobs, the broader economic malice now appears to be biting. Something interesting in that statement. The sector is accounting for 10%. 10% of Australian jobs are in the fucking housing sector. Right? Is he going to let this thing fall? No. But should we be worried about this? Basically, they're saying that loans didn't get written. There is a very, very simple, logical explanation for that. For a business which writes tens of millions of dollars worth of loans every month, whether restructuring loans or getting people financed for the first time, refinancing people's debt, pulling out equity for people, restructuring the debt. We have tens of millions of dollars worth of loans being written every month for investors. I know a thing or two about finance, right? A lot of the data that I bring to you guys, I see 6 months, 12 months, I see trends occur and things occur throughout the markets that lead us to where we are. Looking at the market, I can very confidently say to you that loans are definitely getting written in larger amounts than ever before. What has occurred is we need to think, wow, right? Every action has a reaction. So we have levers that are getting pulled, right? Where are these banks located, right? Are the banks located here in Australia? Right? You may appear that they do, but they're located in Bangalore. They're located in Manila. They're in the Philippines. They're in India, right? What has occurred? These banks are in lockdown, right? These countries, the people are stuck in their houses like communist chickens, like in a farm, just like the state of Melbourne is at the moment, and probably New South Wales by the end of this week, and probably Queensland by the week after. But these countries where the banks are run, the people aren't working. The banks are on skeleton staff at the moment. We have had a backlog. We are going to have our biggest month of loan settlements ever over the course of the next month. Why are we going to have the biggest amount of loans settling over the course of the next month? One part is because we're just being busy, and that's what we do. Second part of it is that all these loans, the banks are not operating at their full capacity. If we look at ANZ for the moment, to get a loan approved takes 42 days for what would normally take 5 days. So 6 weeks to do what normally 1 week loan turnaround time would be. So when the scamdemic hit, basically the loan applications became harder and harder. There's more people out there in the market trying to, so you've got a bottleneck here. You've got lots of people wanting to get loans, but the staff are not there in whichever relevant part of the world that the banks seem to employ their staff. Therefore, the loans are being processed, but they are not being drawn down upon. So the data that they are pulling is showing that there's a lack of loans out there in the market. However, there is more loan activity happening now than ever before. Right? Just because it's not settling doesn't mean that the loans are not occurring. So I think that if we pull the data over the course of next month, 2 months, 3 months, 4 months, we will see that we'll have the largest spikes of home loans written ever, and we'll start seeing some very positive signals coming out from these communist news networks that are out there explaining that home loans are expanding at the greatest point in ever. We might be poised for the biggest boom, whatever sensationalist headlines they want to get you on the day. But in reality, loans are going through more than ever, right? The articles that are out there, yes, we can pull a little small pool of statistical data. We can name it however we want. We can package it up however we want. And we can sort the fear or the propaganda however we wish to. However, if you'd like to know what is happening out there in the loan world, that is what is happening, right? We have had a bottleneck of loans which are coming up to settlement, and it's going to shoot off with so much loans that are settling. It's a common thing out there in the industry. As I said, the banks got massive turnaround. If you are looking to buy a property at the moment or refinance your property and get a loan, it is a very painful process because it takes so long, right? If you try to get a loan, it's great, but the time frame is not a week or two to get a loan approval. It is a month or two in order to get a loan approval. And that is why we are seeing these things occur. So that is just from an insider's view. So we've got about 50 million jammed up in funding that's getting drawn down. Like it's coming through, I think, in the next week or two. And as I said, like it will be one of the biggest months just due to the fact that they're stacked on top of each other. Next topic, this one here is comical. It is one from a satire site, but it's on multiple business sites, and it basically goes on to say, banks offer to kickstart the great Australian dream by charging first home buyers $1 for mortgage insurance instead of $6,000. If you are a first home buyer, you can now get mortgage insurance. So instead of having to use, then this is the thing that I've been talking about, right? Everyone thinks the sky is going to fall in. we're going to just let their house prices. So the banks now have to do whatever they can. They're going to risky territory by taking shitter loans and in return taking a lesser deposit. So how would they be doing this? They still have to get the mortgage insurance company to cover the debts. There's these refinancing fees that you get. Like if you go to refinance your mortgage, you could walk away with $2,000, $3,000 or $4,000 from the banks for refinancing your mortgage. And now St. George has sort of repositioned themselves to say if you're a first home buyer, you can save $6,000 by doing an 85% lend. What does that mean? It means that it is now cheaper to get into a property, and now couple that with any sort of first home owner grant, building grant, stimulus package, whatever that you may receive from buying a property, as well as if you were to have stamp duty put on hold, it would be very much easier to obtain finance in order to acquire said asset. So, the barrier of entry, right? We're now seeing stamp duties being removed, interest rates at 0 to negative. You put your mortgage on hold. We're paying for your deposit. All these incentives in order to, stimulate the property market. So where is the finance market going? Where is the property market going? I think we have very clear indication on where that is traveling. Now, prior to hopping online, I was going to check out something random here for my own purpose while I've got the phone in my hand. Good old Deutsche Bank. Deutsche Bank going to interesting highs. Why is this happening? Why is Tesla going to the highest point in ever? Why is Deutsche Bank getting out of insolvency here? They're just printing their way through this. 5.78 euros is insolvency territory. Touched on that, and just miraculously had a recovery bigger than anything ever before. I'm using Deutsche Bank as a litmus paper for this whole GFD exercise, and it's just a very interesting thing to watch. I actually believe when we see it hit certain points, the market takes certain turns. The reason being is that Deutsche Bank is full of derivatives. Derivatives will be the linchpin to this market. You won't have to worry about a property market crash or a stock market crash. If those derivatives catch on fire, everybody's fucked. The whole system jams up. So, it's interesting, and I feel like as we saw back in September 2019, when we saw the repo market come into play, we started seeing all the bonds being bought up, and then Deutsche Bank price went up to a very good point. And then when the market got rocky, it hit down to about €6 to 5.8 euro, which is very on the line of the 5.78 euro. So looking at it, there's a bit of a buffer there, which may indicate that we're in for something else fun, which I've been predicting for a while. Just like our fun little chart that we saw last week with the ASX interbank futures. This here is the US Treasury yield curve. For my friends on Instagram, here we are here. And basically what we can see on this is the grey line is 3 months ago and the blue line is today. Grey line is 3 months ago, blue line is today. And now these things sort of don't always mask what they are. They don't always track where they've been, but they sometimes go in different directions as yield curves turn negative. So a negative yield curve, which is what occurred all the way up until September 2019, went negative. And negative has always indicated a strong signal for a recession. They've been propped up artificially. If you see that top one there, you can see that the 3 month away is the same as today's yield curve, and that is very, very important. Why I mean that is if we go back in retrospect, and I'm just going to pull the 10-year Treasury bond, and this is off investing.com. It's a It's an app on your phone that you can check out what's happening with charts. That chart that I just showed you shows that the market fell in January 2020, right? Before this scamdemic had occurred. The market was dead. Market was completely fucked. You can see there, January 2020. This is the US 10-year Treasury bond yield curve, and it died. It died back in late 2019. Miraculously, we've got some virus, some Asian guy eating a bat. Right, everyone's in the middle of a war with China. Let's go and try and make everyone hate them some more, and put out in the propaganda outlets that it was based upon that, but it's not. Right, that's just simply the fall guy. There's political games that are being played here, and a bigger game, at hand here. Now, if we look at my chart that I showed you last week, and I said that we were dead and we're in life support there. Have a look at that. If we didn't die, the finance market died in September 2019. Look at it, it's dead. Look at the bottom bit here. Look at this. It's flat. Right? And it's locked in. Right? That's a 5-year chart. It's a 5-year chart. Just interesting. It's interesting because we are in very uncharted waters. What will happen? My personal thoughts, and as always, not financial advice. I can be your financial advisor, or my team can be. You can hit us up on Facebook, hit us up with a link and have a chat with my team on Insta. Just flick a message to us. In my opinion, on what I see happening, they're going to print us straight through this and just keep more stimulus packages coming. It's very... why didn't this second wave happen a little while ago, right? Why are we having everyone in lockdown again, right? Why are we pushing everything back, to where it was, so we can go, oh, look, now we're all fine. No one's died of flus this year. Go and have a look at the stats I'll pull up the stats next time. I'm trying to be a health professional here. But go and look at the stats of how many people died of the common flu this year. No one did. They all just died of corona, right? And here we are. I came close to saying that other word. A lot of you may have been, is Nathan going to say it with the number on the end of it? No. But people are blaming it on that, right? People die all the time, right? We've got 100 people in this country that have died. Sorry to hear for everyone that passed. However, at 100 people with the flu, to lock the economy down at the rate that they have, cripple the economy. The only way we're going to get out of this is when interest rates are at zero and we go into negative interest rate territory. Very exciting times to be alive. So I've got a few questions here from the community. I'm going to read through these, answer some of the questions from you guys. I'm going to ask you guys some questions as well and discuss some of your answers in the message boxes. So let's play that as a little bit of a game this evening. One of the questions from the community says, in Birch feed, people in the comment section are saying that the banks can force you to pay your mortgage off whenever they want. The bank can take your property if you don't pay off your mortgage, even if you have 20 years left on the loan and haven't missed a payment. There are certain laws stopping this. What I'm trying to ask is, if you have got a home loan and you never miss a payment, is there any possibility that the bank takes your property or forces you into paying the remaining loan off in a way shorter time than the loan length? So there's a thing in every mortgage contract out there. It's called an all monies clause. An all monies clause means the bank can request all of its money back within 21 days. You have 21 days to refinance your property, take your mortgage elsewhere, and be able to exit the bank. So they might force you to sell the property on. They must, there's anything that they can do. And it doesn't mean that you're in arrears for them to enact this. Is this something that they regularly enforce? No. I did notice some banks did that in the middle of the GFC because they didn't have liquidity. However, the Australian banks do have liquidity now. I haven't heard of anyone being all money claused. If anyone has been, it would be interesting to hear your story and to hear you share it. I've never experienced it myself. I did see people pre-GFC that had experienced something like that. And yeah, basic year mortgage can be all money clause. And this is something interesting as well. So when I share articles inside of Birch feed, last week I've been really busy, so there's been a lack of content going out. So apologies to everyone. I think it's still been putting out a fair bit each day. But I share videos. I watch all the videos. I watch everything before I post it and share it with you guys. There is comments. Some of the videos I don't have to agree with everything in them. I do hold back on sharing a lot of stuff because there's a lot of videos that 50% is right, but the other 50% would put you on a collision course, which may hurt you in some capacity. So I refrain from sharing those things. Could be someone talking about the economy like I do, but just spruiking and flogging, selling silver or gold or their own wares or their own course or something, which I may agree with 50% fundamentally, which is great if I could have that, but they wreck it by flogging their wares and selling a different agenda which could hurt people. But if you go and look in the comment sections of the videos that I share, you've got random people commenting on random things. You don't know who these people are in the bottom of a video. So be very careful with what you go down and read in the rabbit holes. But yeah, there is such a thing called an all monies clause. If someone was going to do it, I know a lot of people that they would have tried it on, but it's not something that they're enacting at this point in time. And I think it would be very a sensitive sort of thing for the banks to do, and if they did, there'd be a lot of backlash and a lot of people there'd be a lot of ACCC and all these protection groups which would have things to say on ASIC and whatnot. So I don't see it happening personally. Another question here is, Nathan said that taking out 10 grand from your super fund can affect you getting a loan. Does it affect you getting a loan if you are in JobKeeper? Example, I used 2 months of JobKeeper this financial year, and then I'll try and get a loan next July. So with JobKeeper, banks are still taking JobKeeper as an income for people. So that is good news. If you are on JobKeeper, you can still get a loan. How interesting is that, right? The banks are taking it as a servicing, they're taking it as an income, and it's basically universal basic income. And it is here to stay, right? I'm so excited to see when we get to September what they're going to do with it, because they're going to have to keep these stimulus packages around. And the banks are now factoring JobKeeper in as an actual income, right? JobKeeper as an income. Who would have thought, right? So how I see this happening is that people might sit there and what I see happening is that so just trying to read the comments in some of the things coming up on the screen, is we will see inflation, right? And for the first, the first parts of that we'll see is that people on lower incomes will find it harder to get, by. So what might be $750 a week as JobKeeper now just becomes like, there's a bit of fuel in the car and there's a bit of, food in the belly, but not really much, right? Like 10 years ago, $750 a week, that's an average salary. But now it's like, that's petrol money, right? What are you going to do after that? And that's where people will be forced to go back to work. It will set the benchmark that this is the Centrelink for everybody. So yeah, with how will it affect you on JobKeeper? We're seeing a lot of people get loans on JobKeeper. If you are on JobKeeper, as I know a lot of you people out there are, feel free to reach out. Let's see if we can do anything to help you secure finance in this market. If you do pull out your 10,000 from your super, on the other hand, it is not so easy to get a loan. Most loans, probably 85% of them that I've seen, that's a really random number, but I'd say majority of them would have been rejected due to the fact that the banks would not deem you as a person of good character to take out that $10,000. So yeah, that could cause an interesting position. What are my thoughts on obtaining credit in a post-scamdemic world? I said this from the start, guys and girls. It will, for the time being, be possible to get loans. It will be relatively normal to obtain finance at this point in time. However, as people start running and grabbing credit, they will have to readjust their lending policies. So for the time being, it is relatively okay to get lending and funding. However, when we saw what they did back in 2016, 2017 with the introduction of all the APRA sort of lending criteria that they put in place, which affected how investors could borrow, how anyone that had debt, or the credit reporting ways that they report credit, affected the economy, or the landscape. Looking at a thing called open banking. Open banking was something that's been introduced. So if we look at your credit file globally, right, all the banks can see what the other banks are doing with your position. Your bills can be reported on your credit file. That's going to ratchet up harder. I believe it's going to become harder and harder to obtain finance in the longer period, but in the short period, interest rates have dropped from 5% to 2.5% out there for a lot of you, and a lot of people are, saving a lot more money. I was talking about this afternoon in a management meeting with my staff, and looking at the amounts of money people have saved over the course of the last sort of 3 to 6 to 12 months with restructuring their debt. And some of the things that they've done to restructure the debt is just simply refinancing from 4% to 2.5%. You got $3 million saving 1.5%. That's 45 grand a year. 45 grand a year is a chunk of a salary that you've got as a bonus amount of cash flow coming through. Freeing up that cash flow can help you service, so the banks will take that into consideration because your expenses are lower because you've been able to get a cheaper rate, meaning that you can borrow more money. There'll be a point where they will try and cap that by putting extra measures in place. So if you ask me for the time, for the window for getting finance, for obtaining lending, building out the financing part of your property journey, restructuring your debt, it would be in 2020, maybe 2021, maybe 2022, but when liquidity, they're going to keep injecting liquidity in the system. Right? They're going to keep trying to keep this bubble alive in the whole economy. There will be a point when the velocity speeds up and more currency creation starts to occur, that they will make it harder to obtain that credit. That is my view. Now, on the last one, before I start going to your comments this evening, everyone, my team posted on Instagram and Facebook in the, I don't know what you'd call it, like the story part yesterday, some questions, right? And they were pretty cool questions. And I actually asked the team to share it and see what the comments would be. So the questions were, would you rather? No? Would you rather? And then there's different topics, right? So for a moment, I'll let you guys, post your comments, maybe put why, maybe ask why, and have a debate in the live in the questions and the comment boxes with each other. But would you rather have $4,000 a fortnight for life, right? For the rest of your life, you can have $4,000 coming into your bank account, or you can have $3 million right now. Which one would you rather have? $4,000 a fortnight or $3 million right now? $4,000 a fortnight is $2,000 a week, $100,000 a year, or $3 million right now. Let's just call it $4,000 a week. Right? $4,000 a week, $4,000 a fortnight. Would you rather have that coming through as cash flow, or would you rather have $3 million now and then you can do whatever you want with it? Which one would you rather? $4,000 a fortnight, $3 million in the bank right now. For me, I'll answer mine at the end of this, but put your comments in and I'll come back to you all with my feedback on that in a moment. Next one. Would you rather live in your own home or have an investment property? Which one would you rather have? The home or an investment property? Good question. Would you rather pay someone to source a property, or would you rather learn to source your own? That's the other question. So there's 3 questions there. I'm going to just go straight to the bottom and see what you guys are writing and give you my answers for them. Wow. So just trying to read here. Chris, $4,000 a fortnight. Okan, 3 now. Cash flow is king. Harpreet, 3 mil now. Dustin, 3 mil. Michael, 3 mil. 2, 3. Depends on index and inflation. Chris, 3 now. To buy properties, receive more than $4,000 a year. $4,000 a fortnight in 20 years will be like $1,000 a fortnight now. Give me the millions. 3 now. $4,000 a week. Rent vesting, 3 now. Show me the money. Cool, $4,000. Cool. Cool. So I've got a lot of smart people here in the community. So I'm going to answer the first one. Would you rather have $4,000 now for life per fortnight, or $3 million right now? Even if you gave me $4,000 a week, right? $4,000 a week is $200,000 a year. $200,000 a year over the course of the next 10 years would be $2 million. So 15 years you'd have to save it up. It'd be indexed with inflation. It might sound good today, but $4,000 a week in the future won't even do anything. So $4,000 a fortnight would be even worse. That's like $100,000 a year. You need 30 years to build it up. However, if you were to give me $3 million today and also get a 10% return on that, which you could from buying some good cash flowing properties or whatever sort of other investment that you may or may not use, that $3 million would generate, $200,000 a year anyway. Plus you've got the asset that will increase in value, the cash flow that will be indexed with inflation as whatever that asset is gets inflated away, as well as being able to get a higher return and being able to have more control on your capital. So I'd rather take the cash now on that instance. If it was buying a property to cash out though, I'm all about the cash flow. I want to buy assets that get inflated away. So if we're going to see a property boom tomorrow, right? We may see a property boom in 2020. We may, right? Who knows what they're going to do? Chances are we're not. I think 12 months, 24 months, as they print this worthless cash, make it easier to obtain by making it cheaper and devaluing the currency, I can see that we could see a boom, whether it be 12 months, 2 years, 5 years, 10 years. And if the market was to double, would you want to double, nothing that gives you cash flow, or would you want to double an asset base? So for me, I'm all about growing the largest asset base to double. So if we're going to see the market double, do you want to double a $500,000 principal place of residence into $1 million? Cool, right? That's cool. There's nothing wrong with that, right? Having a house that's $500,000 turned into $1 million. Or would you rather see $3 million worth of assets, i.e. 10 rental properties at $300,000 a piece, double into $6 million, right? I want to see the largest capital base and take that through the cycle. That's why I don't just simply sell off my properties, and I do like using debt and leverage, because inflation doesn't work for me. I'm the laziest person out there when it comes to that. People think, Nathan, you're so busy and all this stuff. I am, but it's my lifestyle, it's my choice of what I do. But my investing is very passive because I let the market, I let the system implode on itself, and my other assets and vehicles go up in value along that. Would you rather live in your own home or have an investment property? It's a good one for a lot of people out there. Just having a look here. Some questions. Have an investment. So, would you rather live in your own home or have an investment property? There's no right or wrong, like stability for the family, all that sort of stuff. is important. I just noticed that I'm missing some of my Facebook comments now, so I apologise if I don't get to them all this evening. But yeah, with it, there's no right or wrong. I remember when I bought my first principal place of residence 6 years ago, I think, I think about 7 years ago, I bought my first principal place of residence. There was this article that I had it when I was unboxing in my house, and it was a story, and it was a front page of a newspaper, and it said Australia's very own Donald Trump. And I chuckled because they made this article and said this guy has 130 properties or something like that. And I was thinking to myself, I've got 130 properties, but I'm just moving into my first house ever now. And what I realized is that the property is just a vehicle to get me from where I am to where I want to be, right? There's no emotion attached, right? So I bought my first principal place of residence about 6 years ago after I had 140 properties at the time. And then maybe about a year ago, I decided to not go ahead with building on the site where I was going to build my dream house, because developers are starting to build up behind that, and land is selling for about 500,000 a block. I could fit about 40 blocks on my land, so it's about 20 mil I could sell capital gains tax free. I'm in the process of, I rented for the last 12 months in a brand new spec home with a pool that goes inside the house, and it's cheap as, right? It's really, really cheap to rent that, and it's close to my office, just next to my office. And I just purchased another principal place of residence, which is another 10 acres in Sydney, and I could probably fit about 100 blocks on that in subdivision in the future. So now I don't get emotionally attached to a house. Sure, if you want it for stability, that's cool. I like variety. I'd get a new car every couple of years, and I used to get cars every 6 months, but that's just a distraction. If the numbers stack up, you can get to a cool position. When I first started, I could have bought a red brick property in the Hills District in Sydney. It would have been okay, but I wouldn't have probably left that property. I used the vehicles being other assets to build up myself an asset base. So by the time I actually sold, a lot of people ask me, do I still own my first investment or my first property ever? And the answer is no. I sold that property to share with everybody that was around me at the time that I'm not emotionally invested into my property, and I sold it purely to use the profit that I made from that as a deposit for my principal place of residence. And that property has gone up probably about 3 mil since the time I owned it 6 years ago. So that's pretty cool. If I get to subdivide it in the coming years, it's going to sort of 5-6 times that. So it'll be, and that's in today's dollars. So treat property as a vehicle. If you had $500,000 today, you could buy a Lambo. Just go buy a Lambo, $500,000, 500 grand. But with that same 500 grand, you could go and buy 20 Ford Falcons for 25 grand a piece, send them out there to be Ubers and return you an income. So you can spend the 500 grand on your nice luxury car that you're going to live in, 500 grand on 20 Ford Falcons, have them as Ubers. And with those 20 Ford Falcons driving around out there, they're making you cash flow. And with that said cash flow, you can then go and buy your Lambo. And then when you buy that Lambo, you can go buy yourself a boat. You can go buy yourself whatever you want after that. So just remember, the property is a vehicle, it's not the destination. You need to know where your destination is and make sure you've got the right vehicle in order to get yourself to that place. So would I rather live in my own house or an investment property? It comes a point when you want to have your own house. It's not that great, it's not that bad. If you don't like something, you just move out. I've only rented maybe like 2-3 years in my life ever, just for the fun of it, just from a lifestyle choice. But as I said, moving into my new 10 acres as of next week, I think, or the week after. When you see this background change dramatically, you'll know that I'm in my new property. But the last one is, would I rather pay someone to source a property or learn how to source on your own? It's a good question, right? From my side, that's what I do for a business, right? I locate properties that are below market value, make sure they've got upside for capital growth and a strong cash flow. When I first started investing, there was no realestate.com. There was no internet like we have today. It was bulletin boards. It was forums. There was no video. You were using dial-up to connect to the internet. If someone calls your house, you lose the internet, right? Trying to chat up a chick in a chat room in the early 2000s, that someone calls up and you're like, I lost that chick, right? What happened to my ICQ and my MSN? But it wasn't going to find properties like you can now at the touch of your fingertips. But even so, that just leaves an open market for people to play in. So when I first started buying properties, I used to go out and research areas and go to the areas, meet the agents. I initially worked out what I wanted to buy and what was in line with my budget, and then I started looking at those areas, became an expert of the area. Then I realised that if the market got damaged, because when I bought my first property, it was 2003, the market got hit big time, and I thought to myself, if the market goes down, I want to make sure that I've got protection there to, if I had to sell it off or whatever the case may be, that I could get, my money back. So, and later on I realised what equity was and being able to, snowball my property portfolio. Looking at, the research that goes in, you may have time to, go and find a property. You might have the skill set. Nowadays I have real estate agents that come to me, have processes and systems in place, always have about 500 offers out there in the market at any one time. Might pick up 2, 3, 4 properties, from my offers out there. But, it's that's what I do as a business. So, if people need help on locating properties and negotiating the properties, I did a deal today. I had 5 people that could buy one of these, and they are off-market units in a location. I'm just going to say that off-market 2-bedroom units in a capital city, not in a bush, right? $55,000. Comparables are at 125,000 plus. So picked up those properties, and those things don't go on the internet. So without having the contacts and the resources and knowing the areas, it would be difficult for someone to do those sort of deals. So, and that's what I can help you with. So that was come to me if you need help for deals. But interesting to look at the other parts of the questions. For me, $3 million. I'd rather take, and I can use that to generate cash flow. If you're going to take $3 million, blow it on a big weekend and partying up on a boat or something, probably best to get the $4,000 a fortnight or even a week. But I'd rather take the cash and build cash flow. Recurring cash flow is very important. So you could be, lucked out on that $4,000 a week and go, I'll just rather take that, or $4,000 a fortnight. But I'd rather take that cash and make the inflation work for me and be able to build up a sustainable asset base and portfolio from that. So just going to read some of your questions here. I'm going to try and keep this one to an hour today. If I can, I'll try my best. So I'm going to answer some of your questions. Chris, the question is, how do I get my serviceability up? My business has doubled in the last 12 months from 250 to 500 a year, and income also doubled. I have 20% and still pulling my hair out. Hit us up, Chris. I have the best finance people in the industry in my office. We help people in all different positions be able to get themselves to servicing. I see people that can't service, and I structure them in a certain way to be able to, get themselves back into servicing territory. If I had people which can't borrow, they think they're shit out of luck, and over a period of 12 months, 18 months, they're back borrowing with the big 4 banks due to the way that they've been able to secure a few certain assets to generate cash flow, and with that cash flow, then they can, put that into their profit and loss. So, but it sounds like you're in a good position. Reach out to my team, hit us up, click on the link and get a discovery session and ask the team how we can help you out. That's what we specialise in. So Me and my mate are pre-approved for rentals and only took a week or so in New Zealand. That's cool. There's still stuff happening out there in the rental market. A lot of people still renting. I run a large property management firm. I saw my team here from the Gold Coast. Shout out to everyone. They're all messaging beforehand, saying that they're online. I can't see the messages now, but it's good to always see my team, my asset management team. Basically, online, so I see them every week. But basically, like there's rentals, like there's tenants still in abundance. So I realised that there's the lowest amount of rentals in my Sydney office, right? Probably 4 meters away from me every day. I have a team of staff that specialise in renting out people's properties, and we've got the lowest vacancy rate. Probably in the last 3 years at the moment, we've got the lowest amount of vacancy in properties at this point in time, or properties coming up for lease. So, there's a lack of rentals in that place, but yeah, people are still renting. It certainly means that they don't expect prices to fall. I believe so. And so I think you're referring to my previous comments. Josh, by the way, Yellow Brick Road has told me withdrawing super is no problem to obtain mortgage. What do you think of that advice? It's too hard to give financial advice, but on that front. But if you do take your 10 grand out and it hits your bank account, it'd be very. You need to disclose these things, and the banks will see it. They will pick it up. So with it, just be very, very careful of what you're pulling out of your super. So speak to all the relevant people and think about what could be the reaction when you're pulling this out. Dane, good to see you noggin again. Thanks for tuning in. Why do the powers to be want to cripple the economy so badly? The economy is crippled. Well, they need to try and re-jumpstart it. So need to re-jumpstart it by putting that shock through the system. That's what they're doing at the moment, but that'll come in the format of universal basic income, negative interest rates, and sort of where we're at the moment. Just going through some of the things here, seeing your comments and your questions you'd like to learn. Investment. Take the cash. Give me the 3 mil cash. Show me the money, Jenny. I hope you're well. Use a buyer's agent. I'm lazy. Well, if you need to have help, that's what I specialise in. I've built my home into a cash flowing investment property. That's awesome if you can do that. That's great if you can build your house. It's not saying sell your house and go buy rental properties. Everybody's position is different. There is no right or wrong. You can use your house. So what a lot of people don't realise is that they could get their house that they own and they've got equity in it. They could have 200 grand in there, and that could, in turn, they could take that equity and use that to buy 1, 2, 3 or 4 properties. With my example beforehand, those properties for 55 grand, they rent for $200 per week. Someone that has 200 grand equity in their property, they could go buy 4 of those properties cash using equity. Have the titles, have 4 titles on their wall, right? And then with those properties that are owned outright, you could use them to take that cash flow that you're generating from them and pay off your mortgage. There's all different strategies that you could use. So obviously there's no one size fits all. Make sure you speak to someone that can help you on that front. My team can do that. So book in for a discovery session. The link is in the description. Michael, cash flow now to buy than leverage. It's cool. Both learn and source and use one to get me started. Cool. Both is good. I'd have a rental property and go live with the family. That's what I started. When I first started, I was living at home until I was about 27. So it was the decisions that I had to take, and I made sacrifices. I made sacrifices. Not everyone makes sacrifices when building their property portfolio, but I did. It doesn't mean everyone else has to, but yeah, there's all different options. 3 mil equals 227 Bitcoins. Go EOS. Not endorsing any cryptos at this point in time, but go EOS. Sam, what's your thoughts on New Zealand market and any interest in investing in there to spread the risk? Not a fan of New Zealand market personally. There's nothing wrong with it. I know I've got heaps of New Zealand fans. They're always reaching out, and make sure you're going to do an event possibly a webinar or a special Facebook Live for those of you that are from New Zealand. Anyone that's in New Zealand and wanting to come and purchase in Australia, I'm going to do a sort of event to talk about how New Zealanders can buy here. But as for buying in NZ, it's a new system, it's new laws, it's new regulations, it's new taxing, also a new different currency, so you're hedging a currency. So I keep all my investing into Australia. As to the previous comment, that was about 227 Bitcoins. I do invest into cryptocurrency, which will have a large level of volatility, and that brings enough volatility. I don't need to add levels of currency volatility into my property investing market. So not that it's bad, it's just my personal, Sam, with the tourism industry getting destroyed, what are your thoughts on purchasing cheap hotels, backpackers, caravan parks, etc.? They're not on sale at the moment. I actually feel looking at motels, always look at motels. I own a few motels myself. In Australia at the moment, there's a very big shortage of this sort of stock out there in the market, just due to the fact that there's a lot of people going to local sort of destinations. So people aren't going overseas. Like I went to one of my motels on the weekend and it was fully booked. Like it was, every room was booked out and it's booked out for weeks in advance. So I'm like, how in the hell is this place being rented out? I wouldn't even, I'm not saying it's bad, but it's not a place I'd think would be fully booked out, but it's completely fully booked out for months for weeks in advance. So a lot of people are sort of out there at the moment and are sort of, that's a very big industry, I believe. So I think it would be the opposite in Australia. People are going for little trips into country towns and into seaside towns and all that sort of stuff. Lee, pay a professional, I earn in my profession and pay someone else to source a property, then make money from both sides of the coin. Good point, Lee. I find a lot of people that appoint me as their buyer's agent slash, what else do you call me? People call me a buyer's agent. I'm thinking a bit more than all the other buyer's agents out there in the marketplace. But from an aspect of locating and building portfolios, I run my office like a family office where I help people structure their portfolio and guide them with building out that portfolio to get to their financial goals, whether that be 1, 2, 3, 4, 5, 10, 15, 20 properties. Everyone's strategy is different, everyone's goals different, and that's where I sort of come in to help as well. Apart from just buying the property and locating it, it's actually building that strategy. Would you buy acres in a rural town and build a house as an investment with the potential to subdivide at a later date, or would you buy a block of land built up in an area as a first investment? It just depends on what the goals are. The question I always ask is, how is the property going to help me get to where I want to be? Is it bringing you equity? Is it bringing you cash flow? How's it going to fit into your overall strategy? I do have a few questions here from Instagram. And I've only got a minute left here, and I'm going to wrap up on Instagram for this evening. What is your opinion on borrowing money to build a granny flat to improve cash flow? Good question. I look at properties. If I'm picking up a property for 100 grand or 50 grand, I'd rather buy a whole new asset. I probably own out of 200 properties, maybe one property with a granny flat. I don't build granny flats in my properties. I'd rather spend that capital on acquiring a whole brand new asset. So yeah, I'm not a fan of granny flats. Nathan, how do you approach a real estate agent to buy 50 to 100 grand off below market value and telling them not laughing at you to piss off? It seems to happen a lot. Probably comes back to employing that buyer's agent, which I can help you with. But yeah, understanding the market, negotiating, not making it me against you. It's, let's work together. So I always walk around like I'm very poor and pull my pockets out and be like, I'm really trying to make it happen. How can we sort of make this happen? And understand, like, I don't just walk around to every property and drop an offer on it and say, here's a low ball, here's a low ball. It's important to have the right sort of person to play with, because there's different agents, different, strategies, different way that agents behave, and you need to respond to that differently. And basically, negotiation is the key, right? You're dealing with someone in sales that's a professional negotiator, so you want to find a weak salesperson to be able to work with as well and give them what they need. So if you can position yourself as being able to provide a solution, I'm an easy buyer to deal with, I'm going to make it quick and seamless to the owner, making a win-win outcome, that's generally what works great. Homicide, you can turn into a cash flow. Do you think flipping homes are good in this corona market? I lost it. So I'll leave Instagram and I'll come and answer the last couple of questions here on Facebook. Do you think that GST will increase to 20% maybe? Potentially in the future. They could pick up, all the tax cuts and stimulus via, boosting up the GST rate in Australia. But I don't see any time in the near future that they're going to be putting GST up to 20%. They could in the future, who's to know? But at this point, in the next couple of years or the next period of time, we're in a deflationary cycle and not in an inflationary cycle. Maybe in an inflationary cycle, they would to bring it back down. Yes, I just saw, Chris, that you tagged your mate Jono. Hopefully, everyone's having a good night, and thanks for tagging your mates in here. Listen to the start. He says JobKeeper is classified as an income to the banks. Yes, the banks are classing JobKeeper as an income. So, okay, can you explain equity, taken and out loans? How does it work? I'm finding it confusing. Okay, cool. So equity, say for instance you buy a property for 200,000 and it goes up to 300,000. Let's assume that you bought the property for 200,000 with an 80% lend. That meaning that you've put down 40 grand deposit and you've got $160,000 loan. So the bank will give you 160, you put in 40, there's an 80% lend against a 200 grand asset. If that property goes from 200 grand to 300 grand, then you could get a loan potentially of 80% of the 300 grand. So 300 grand, 20% deposit being 60 grand, the 80% being 240 grand. So you could get a 240 grand on that property and refinance it. That means that your initial loan was 160 and you've got now 240. So 240 minus 160, that there's $80,000 left over in equity. With that $80,000 in equity, you could use that as potentially two deposits to buy two properties worth 200,000 again, and those 40,000s are the 20% deposits, and you have to pay the closing cost, stamp duty and whatever in order to make the transaction happen. But that's how a lot of people, I think, I've got to save up my deposit, I've got to save up the money. No, especially with interest rates at 0%, right? At the RBA, they're 0.25%, right? At a lot of banks, they're like, I've just seen a bank the other day, 1.99%. There's a bank in Australia, it's some shit bank, and it's offering 1.99% interest rates, right? At 1%, 2%, 3% interest rates, it's very cheap to take that extra debt and then go and purchase another asset. As I said before, and if you've got a portfolio of 500 grand turning into a mil, that's cool. But if you've got a portfolio of 5 mil turning into 10 mil, it's important to have that asset base that goes up in a cycle. So if you need help, if anyone needs help on strategy, reach out to my team, right? Like discovery sessions, having a chat with my team about your positions, where you're at, what you're trying to achieve. I've got about 100 staff as a part of the B.Invested group of companies that are all here to help you. It doesn't matter whether you're on the accumulation phase of your portfolio, the financing phase of your portfolio, consolidation, management, accounting, legal, financial planning, super funds, even managing like software. I've got computer software that helps people that we've made myself over, or me and my team have made it over the course of the last 10 years. Harpreet, will Perth property go down after September, you reckon? No, I talked about it beforehand. I actually feel that Perth's in a bit of a good place at the moment. It's interesting there. But they have just extended the mortgage holidays for everybody, and I believe that we will see JobKeeper be extended as well. But JobKeeper. Daniel, when will the rent in Penrith go up for a 1970s 2-bedroom, 1 bath, 1 garage? I think it's $275 at the moment. Last year it was about $290. Thanks, Daniel. Look, if you need help on managing that, I manage hundreds of properties out in the Penrith, Western Sydney corridor. I actually manage them from in my office, in my head office here. So I've got half dozen staff that sit sort of 4 meters away from me that do manage out there. So if you would like us to have a look at that, give you a bit of a review on your rents and see if we can push it back up to that 290, reach out to my team. We're still getting strong rents out in the region, and it has been hit over the course of the last 3 years. The market, I remember when those 2-bedroom units, the old ones, used to rent out for like $340, $350 a week, probably about 4 years ago, and they've come down slowly since then. However, they have hit a bottom, and there is a lack of stock. As I said, the lowest amount of properties we have for rent in the course of the last sort of 4 years. So markets are pretty solid out there. What do you think is going to happen during the August, September, October in the share market when companies, and I'm not talking about the Australian company Afterpay, I'm talking about the non-high-tech companies, report no revenues? You think we will see blood, and as a result, people will move from shares investment to property investment? That will raise the property prices. Very, very good, Rani, for bringing that question up. That is something I talked about. I said that we would see the real crash. The stock markets, the paper markets, and more stimulus than ever before. The phase 2 of quantitative easing here in Australia will come over this quarter. We're going to see all of these companies, which are zombie companies, they're insolvent, they're completely screwed up. They have to report throughout this quarter. They're going to be reporting that they're bankrupt, insolvent, and have earned no money, and are in a very, very bad position. Technically, the stock market should implode, but with a level of money printing, it's holding up, right? And it makes no sense, and that's fine, but they're just printing more currency. That's going to find a home. Whether the stock market gets hit or not, I believe it will. Inflation is going to gobble up and hurt many, many people. Afterpay will be very much needed in that period of time because people won't be able to afford anything at all. So they're going to need something to be able to afford something. They'll take whatever out of desperation. So, yeah. Erkan, as a buyer's agent, do you give a few properties options to customers? How long do you give them to make decisions? Do they have all their finances ready before talking to you? As for my investors in the buyer's agency, I like to make sure that I want to understand their goals, what they're trying to do, work out a plan and a strategy on how best is in order to get there. What sort of asset they need to acquire in their portfolio. I was talking to one of our viewers here last week, and I had a chat with him. He messaged me saying, I want to buy some of these properties that I've got, and I'm glad that we had a chat, because when I had a portfolio review with him, like, look, we need to be buying these type of properties, not these type of properties. And we it's not about buying the first property or the second property. It's about buying property number 4, 5, 6, 7, 8, 9, 10, and stretching out the horizon and working out what are the longer picture goals. So we're getting the right property to get us there, or the right asset that we're acquiring now to get us there. So I work very closely with my investors to ensure that we're buying the right assets and we're achieving the right goals. So in order to get the finance, like, I don't just go out and buy properties for people for the sake of it. It's a very strict sort of process in order to come on board to become a client of my investment firm. But have a chat, like, for everyone that's watching, have a chat with my team and have a discovery session and see what your goals are and how we can help you achieve them. But as for having finance ready, I think it's important that we assess your finance position before you do acquire a property, because I've actually never had anyone that has come on board and has bought a property without having finance sort of looked at and go, okay, cool, we can see it servicing at the bank. So it doesn't need to be approved before buying a property, but we need to have a finance strategy in order to build you out to where you want to be. So the property has to play a role. I know there's lots of people out there in the buyer's agency space who just be like, oh, buy a property, buy 2 properties or whatever, but those properties need to perform a task in the overall picture in the grand scheme of things. So Sam, will capital cities still continue to push infrastructure when the economy is so shit and the scandemic keeps trying to lock people down? I believe we'll still we'll see government-controlled measures throughout this time, whether it be new roads, new projects, upgrades to hospitals, keeping the construction. If those cement mixers aren't, pouring for building a house slab, they're going to make sure that they're, supporting that industry by building a new hospital. So the concreters, the electricians, the plumbers, and everyone will be, pumping that up. And we've seen that over the course of the last 3 years. And we're seeing now incentives to push up the property market with all the incentives. Lee, buy as many properties as you can. Forthcoming inflation, potential hyperinflation, pays today's mortgages with inflated dollars. Happy days. Then what? Buy more, sell down some debt, pay down debt, live mortgage free. What's the play in your opinion? No financial advice, please. Look, it's a good question. What is the big term play? Everybody's goals are different. It could be that you buy double the amount of properties you need, right? So if you want 10 outright, you might buy 20. If you want 5 properties owned outright, no debt, you might buy 10, watch them double, sell off half, pay out the other half. That's one potential strategy there. It could be that you buy 10 properties and then the rents rise in value. And then with the rents that are rising in value, you can use that cash flow to live off. You could use that cash flow to pay down debt. You could do projects, you could build properties, you could do renovations and flips, but I wouldn't be looking at doing any sort of larger sort of scale things, buying blocks of units, building properties, developing and flipping properties. I don't ever look at doing those things until you've got the foundation portfolio built out. So that's my view on that side of things. Steve, what are your thoughts on the Logan area and Redland Bay area? All comes down to price. I've bought in both areas. Do I think just go out and buy in Logan? If you're buying at the right price, opportunities, the numbers stack up, that's cool. I personally buy from Tweed all the way up the Sunshine Coast quite regularly in Queensland. But it all comes down to the value, down to the pricing. In some of those areas, I'm picking up properties for like $100,000 in those areas. I'm talking about in Brisbane. So last year I picked up a property for one of my investors. It was a place I paid the same price. It was sold in 1982 for 80 grand. I paid 107,000 in Toowong in Brisbane, 6 Ks from Brisbane CBD. So will those deals come up every day? No, but I was able to do that for this investor. Harry, hi Harry. Thanks for tuning in tonight. I was going to say checking in, but I said tuning in. Johnny, are walk-up units in Victoria a good investment, as I've seen units in some areas having a 6 to 7% rental return at entry prices of 200 grand. Depending on where in Victoria, are we talking about Melbourne? If you're getting a unit for 200 grand in Melbourne that gives a 6 to 7% yield, potentially. If you're talking about a regional area, probably not. I'm picking up properties in Sydney with a 2 in front of them. They're returning 6% in 2020. So depending on where it is, I'd want to be buying in capital cities. If I'm only getting a 6 or a 7% return, I want to be buying in capital cities. If I'm buying out of a capital city, then I want to get a larger return. So maybe 10, 12, 15, 20% return. They are possible out there. If you need help on that, as always, hit us up, see how we can help you. On that note, guys, I'm going to try and keep this one very tight. And leave you guys to the rest of your Tuesday night. I wanted to thank everyone for tuning in. If you've got any questions, need help with anything, feel free to reach out to my team. Hit us up. If you want to have a discovery session and chat to my team about your position, see how we can help you, see if you can tweak your portfolio in any capacity, whether it be increasing the cash flow, whether it be lowering your interest rates, whether it be restructuring your debt, whether it be acquiring more assets, whether it be pushing up the rents on your existing assets. Feel free to reach out to my team. There's a link above, or flick us an email at admin@binvested.com.au, but there is a link there, which is better, or flick us a private message. So on that note, I'm going to answer the last 2 questions before I leave. And if investing in units, do you allow for strata fees, etc., when factoring if it will be neutral or positive cash flow? Good question, Sam. When I buy properties, I want to make sure that it's covering all expenses. So no, I don't look at interest rate versus rent. I look at council rates, water rates, insurance, strata, real estate agents' fees, insurances, mortgage. It needs to cover all of that. It needs to be neutral cash flow after all those expenses, and I never count any tax deductions in it. That's just a bonus and the cherry on top. So when doing your numbers, guys, if it's not neutral cash flow after all expenses, you need to question how's it going to help you in the longer overall picture. Luke said spend 150 to 300 grand in capital cities. Correct. If I'm spending in a capital city, I want to be spending 150, 300 grand, maybe even 500. I buy at all different price ranges. My expensive property is in the $1 to $2 million price tags. I've got maybe about 10 properties that I bought in that price range. But yeah, generally in capital cities around the 150, 200, 250, 300, 350 sort of price range. And you can buy in capital cities, whether it be Sydney, Brisbane, or any of the majors. So on that note, guys, thanks for tuning in. Catch up. See you next Tuesday. And stay safe in the meanwhile, and watch out for the brainwashing from the media out there. Bye for now.